First Trades, presented by BSC, Investors Protection Fund.
Hello, welcome back. You're watching First Trades on Bloomberg TV India. Ambareesh Baliga, Managing Partner for Global Wealth Management at Edelweiss Financial Services, joining in this morning. Ambareesh, it's been pretty volatile over the last couple of sessions, hasn't it? I mean, we've got a steep correction coming in since somewhere around mid-July. In fact, yesterday's trading session giving some hope. Is there a sustained recovery looking in the near term, or it's going to get pretty jittery now?
No, I don't think there can be a sustained recovery as long as you don't have a handle on the rupee, and despite whatever sort of news bites come from Delhi, we are not really seeing the rupee even stabilizing at these levels, and we are seeing a further depreciation. So as long as that continues, I don't think the markets can really start to rally or gather momentum. Whatever we see could be temporary, because of which I've been saying for the last few days that possibly the upside for the market is limited to about 56.50, 56.80. I think going beyond that will be difficult, and sooner or later, if things don't improve, we could again test those 50 or 100 levels, or possibly below that, because clearly the economy is getting into doldrums, and whatever macro figures have been coming out, and also what we saw yesterday, seems to be very disappointing.
Speaking of disappointment, one is the currency, 61.60 this morning. We've got our eye on it. And some interesting calls are coming in, by the way. Guess who's downgraded Cipla? Morgan Stanley. They've cut the price target by about 7% to 386, and they've cut the stock to an underweight from an equal weight earlier. So that's a pretty interesting view coming in. And we've been asking this question last couple of days. The pharma debate has been really on. Whether the best of the pharma rally is over, is it petering off, or whether there's more steam on this. Ambareesh, you want to quickly throw in your view on this before we hit opening? What's up with pharma?
Pharma, already most of the stocks are overvalued, but then that's the only performing sector which we have seen. So I suppose liquidity, whatever is there, would flow more towards the pharma stocks than the other sectors. Even IT seems overvalued. So for the time being, I really don't see too much of a downside for pharma. But then I suppose making fresh investments at these levels could be risky.
Okay. Of course, we are watching out for a couple of stocks in the pre-open. By the way, some are very weak. For instance, United Bank of India. There's a complete disaster in terms of earnings there. NPA levels are at 5.5%, which is very similar to, of course, State Bank of India. Some of those stocks are weak. DLF is up about 3.5% on those better than expected earnings. There's a 3.5% up move on DLF. ONGC slightly negative. These are, of course, the big stocks that we are watching out for. Lots of result reactions coming in this morning as well. Priyank?
All right, so 20 odd seconds left as far as markets are concerned. You're seeing a bunch of stocks to be on the radar today from the OMC, or rather from the oil and gas pack. Keep an eye on ONGC. That's the big one that came up with the earnings post-market hours. You also want to keep an eye on the OMC pack. BPCL and IOC will be reporting their earnings today. So let's see how all of them actually open up in trade. And once again, the banking counters will also be on the radar on the back of all those brokerage views that we picked up on SBI post earnings that actually came in and the measures. But nonetheless, Sensex straight away down by around 56 to 60 points is the kind of opening that we've seen. Take a look at ONGC, 2.5% cut coming in on that particular counter is what we're seeing, rather 2% now is the kind of fall that we're seeing as far as that stock's concerned. Some of the other losers in opening, BHL is down 1.5% or so, HDFC Bank down 0.3%, HDFC down, ICICI Bank down 1.6%, pull up SBI as well, 1.5% cut on that one, Tata Steel down nearly 1.8%, Hindalco, Novelis came up with their earnings, 2% cut on that particular counter. Hindalco itself will be reporting earnings today as well. Sun Pharma, that's the other stock that's down by nearly 0.5% is what we're seeing so far in terms of opening. Alright, a quick mention on a couple of gainers. ITC up 1%, TCS and Infi getting some support. Wipro also in the positive by 1% or so. Hero Motors pretty strong, 1.7% gain coming in on that counter. M&M to report its earnings today, 2.5% gain almost on this counter is what we're tracking so far. Alright, let's pull up the Nifty. A quick mention there as well as to what kind of trade we're picking up. Index down around about 31 to 32 points, 39 stocks losing, 11 odd stocks gaining so far is what we're tracking. 55.80 is the kind of level that we're seeing on the index. Individual movers, DLF reacting to its set of numbers, 3.5% gain on this one. M&M to report earnings today, 2.2%. Sangyong had a decent amount of earnings that the company actually posted yesterday. Hero Motor 1.5% gain there. NMDC, HCL Tech also showing some gains this morning. Novelis numbers somewhat mixed. Hindalco down 3.5% is what we are tracking. Ultratech 2% lower. Bharti, Axis Bank and Ambuja Cement are some of the other stocks that are losing out on the index. So Surabhi, it's been a pretty much a muted opening. 55.84 is what we're tracking in terms of levels.
Sure, Priyank. Before we get to the mid-caps, just looking at the rate on Tata Motors again, because remember there's that recall in China of about 11,000 vehicles, JLR vehicles, if I remember correctly. The stock's down about 0.5%. Okay, beyond the Nifty 50 pack, quick reactions coming in. Bad numbers, Hindustan Copper 2% down. On HPCL, there's a 1.5% drop. Considering most analysts seem to think that the GRM number was below estimates. There's a 0.5% decline right now, as we can see there. Indian hotels, which reported numbers just as the market was shutting yesterday, down 1.5%. Peninsula Land is a big disappointment. Profits are really abysmal. The sales haven't really moved in the last 3 months. Stocks down 4.5%. We are seeing weakness on a BPCL as well, by the way. So the entire OMC pack seems to be under a little bit of pressure. Marico's numbers seem stable, plus there's a Credit Suisse upgrade on the stock. So there's a 0.5% up move, as we can see out there on the screens. Speaking of FMCG, Britannia is continuing its cheer from yesterday. There's a 3% gain on Britannia. Quite a few of these infra stocks have lost out their flavor. IRB and Punj are negative. Let's pull up GVK Power. It had lots of improvement, at least quarter on quarter in those numbers. Let's see if the stock's still holding up. Yep, after a 10% rally, a 5% up move on GVK. All their businesses have really done well this time around, particularly the airports business. So that's one stock that's, of course, in the limelight. Beyond the news and the earnings, DLF, of course, a very strong result reaction as well. Forgot to mention that. 5% up on DLF, as those earnings have been above most street estimates. Tech Mahindra, there are a couple of upgrades that have come in after analysts have seen the numbers in detail. So again, there's an up move there. Orchid Chemicals is a name on the upside as well. Some of the active mid-caps continue to fly around this morning, including Tata Tele, by the way, 6% of an up move on Tata Tele as we see it right now. And Island FS Transportation Network also from yesterday. So these are some of the names that are on the radar. Getting back to our conversation with Ambareesh. Ambareesh, what about the banks now after seeing SBI?
I think a tough day is still ahead, and looking at the way the economy is going, clearly you will have the credit growth still coming down, and more importantly, you will have more NPAs cropping up going ahead. So clearly, I think banks, especially the PSU space, I think one should be staying out for the time being, at least for the next foreseeable 2 to 3 quarters.
Ambareesh, tracking the auto pack as well this morning. Hero Motor doing pretty well. M&M to report earnings, 1.8% gain coming on the counter as far as trades concerned right now. What do you make of this space, and your thoughts as far as M&M and Tata Motors are concerned?
In fact, we are not so bullish on Tata Motors. Again, we are looking at a slowdown in China, which has been the major market, and now with this recall news, I think that's also negative. The only stocks where we are slightly positive in the auto space is M&M, which we continue seeing doing extremely well. Whether it's the international business, the Korean subsidiary also has done extremely well, and at the same time, domestically we also see the tractor business really taking off with good monsoons. So this is one stock where we are quite positive. The other one is Maruti, which I would possibly wait for slightly lower levels. We still see that the stock can come down by another 7 to 8%. I think at those levels, Maruti becomes a good buy.
Ambareesh, metal stocks were very active yesterday. Today, I'm seeing most of them on the downside of the screen. Hindalco, for instance, is down about 3.5%. We're also waiting Tata Steel numbers. Is there anything to play for here?
Not really. I think whatever bounce we saw was sort of a blip, based on the Chinese data which came in, and that's very short term because the cycle is yet to turn up, and I think the cycle will be down at least for the next foreseeable quarter or two. So I think for the time being, it's still time to actually stay out of metals, but I think at lower levels, it should give a good opportunity because normally, it's a cyclical move, but since the cycle is still down, I would suggest people to just wait for another 3 or 4 months.
Speaking of blips, is that what DLF is this quarter, or is there something that's really turning around from the bottom here? Stocks up 5% as we speak. Their numbers have been above estimates.
Numbers have been above estimates, but I don't think there is much to cheer about because really if you look at the ground level issues as far as the property market is concerned, whether it's Delhi, NCR or whether it's Mumbai or even in Bangalore to a certain extent, we are starting to see a slowdown. So properties overall, I think one should be staying out. I think a stock like DLF, although we have seen some jump today, but overall I see levels of closer to possibly about 110, 115. I think at those levels one could take a view because finally, if you want to remain in this space, I think DLF is one of the better buys, but surely not at these levels.
Ambareesh, two stocks from the oil and gas pack. ONGC losing out a little bit, 2% lower in trade, numbers coming out yesterday, and the other one being Reliance Industries. Your thoughts on these two counters?
Reliance, I would still be slightly positive even at the current levels, again looking at the gas repricing, but ONGC, I think the subsidy issue will still continue. To haunt this stock, and also looking at the way the rupee is moving, I don't see the subsidy issue really going off, at least in the near future.
Since we're on the subject, what about OMCs, Ambareesh? The market was so excited when this decontrol happened, first on petrol, then on diesel, but some of that excitement has really worn off.
Absolutely. In fact, I was also excited after a very long time on these OMCs, and we had suggested a buy some time back. But like I said, the way the rupee is going, I think that's going to the party, party pooper for the OMCs. But then I suppose it's still time to possibly wait and watch, because if you're looking at the longer term with clearly that pricing mechanism really going off, I think that's still quite positive for the OMCs. So I think wait for slightly lower levels to pick it up.
What about the IT pack, Ambareesh? Seeing some activity this morning out there as well. HCL Tech, you have a couple of Infosys, all these stocks actually holding on to some gains. Is that probably a theme to look at in the near term then?
From a trading point of view, possibly yes, but I think valuation-wise, most of them have become quite expensive at these levels, and clearly we don't see the rupee depreciation clearly being a very positive for these IT packs from a longer-term perspective. Short-term, yes, surely this gives a bump up, and because of which we have seen a good rally. But I think more or less most of them are at the top. I don't see too much of an upside from here, but from a trading point of view, possibly either 2 or 3% bump up is very much possible.
All right, so just to quickly recap the opening trends this Tuesday morning, market's still down about 0.25%. Actually, the only area where there's some buying is IT, some of the stocks that Ambareesh was talking about. There's some result-oriented buying that's underway on DLF, and anticipation of decent numbers on M&M, which is pushing up that stock higher, 2.5% up. There's some buying on a Hero Moto, and that's where the good news pretty much ends. If you look at the weaker side of the market, why is there pressure this morning? Then the nifty losers would include a lot of bank stocks. Once again, we're looking at weakness on an Axis Bank, on a State Bank of India, on an ICICI Bank. So across the board, weakness on banking is persistent. And the other negative trend that we're looking out for is the metals arena. Yesterday's mega rally, that 4.5% up move on the metals index, all that is a thing of the past. And we're witnessing some weak trends on most of the metal stocks this morning. Hindalco is down, Tata Steel, most of those stocks on the lower side. That's what's going on. So it's not looking very confident for now. And I guess Priyank will have to really wait and watch, because again, now what really can support the market? That's the biggest question right now. There's a little bit of feeble buying on IT. Banks aren't participating. Reliance is choosing to sit out. So it's a little questionable, I guess.
True. In fact, let's ask Ambareesh that itself. Ambareesh, now when we talk about the fact in terms of advice to clients and investors at current levels, what's your advice been to them? What have you been telling them? Because as we started the conversation earlier as well, it's been pretty jittery of late.
I think there's hardly any place to hide. I think the only sectors where people were investing, at least in the recent past, was like FMCG, pharma and IT, where again we feel that most of the stocks have become quite expensive. The risk-reward ratio is not really favorable. Again, FMCG, if we talk of, I think most of the margins come from discretionary items. And discretionary item, I think the way the economy is going, I think the demand for discretionary, sales will in fact come down, and along with that the margins would be under pressure. So FMCG at these levels, we are clearly asking people to book out to a certain extent. IT and pharma, we just discussed, saying that at these levels they seem quite expensive. So there is hardly any place right now where one should be investing. I think one should hold on to cash, because I think over the next 2 or 3 months you'll get a lot of opportunities to invest at much lower levels. So I think one should just hold on to cash and wait and watch for a while.
All right, Ambareesh, thanks so much for joining this morning. That's the advice coming in from Edelweiss this morning as to how they're positioned in the market. Stay on to cash is what Ambareesh is recommending.
Yeah, cautious approach out there. That's where we'll take your leave. Thanks so much for joining in. Lots more coming up in business on the other side.
First Trades, presented by BSC, Investors Protection Fund.